Good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. Before we get into the good stuff, I want to remind everybody that futures and options trading contains substantial risk, is not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not necessarily indicative of future results, and what we talk about here in this program contains neither trade recommendations nor financial advice and should only be taken for educational purposes. And with that out of the way, want to welcome back to the show, of course, Anthony Crudele. How you doing, Anthony?
Good, Tom. How are you today?
I'm doing well. We're having great weather here on Long Island, and probably not as great as yours, but it's nice to have another sunny, warm day, almost midway through December.
Yeah, it's definitely not as nice there as it is here in South Florida. It's gorgeous right now. I can't wait to get off the call. Not that I can't wait, but can't wait to be outside again. I took my dogs for a walk this morning, and this is why I live in South Florida. These are the times.
Yeah, so you've made the transition, right, from Midwest to South Florida.
Yeah, I haven't seen snow in years. I kind of miss it in some weird ways.
Well, you can always take a weekend, right?
Yeah.
Fly up, fly down. Yeah, so this is great. Welcome back. It's been a week since we spoke. What's going on with you? What's going on with the markets?
Well, this morning I put a tweet out. I said, this is the only day every quarter that I choose not to trade equities. And I also talked about how I'm long copper, why I'm long copper. And we'll get to the charts and look at that. And I want to talk about rollover because I'm sure many of you are probably new to futures. And especially if you come from the stock world or the crypto world and you get into futures, you realize all of a sudden we have this day called rollover. If you're trading the S&P, if you're trading any market, really, commodities, a lot of them are trading rolling over monthly. So you got to know which one's the front month, and it isn't necessarily always the month closest to us. It might be a month out or so. So there's definitely a little homework you have to do with that. But today is an equity rollover, and so basically we're moving from the DECE contract to the March contract, and it's a choice. You don't have to do that right now, but this is technically when we move to the front month. And then over the next week or so before we completely roll over, and then DECE of 22 drops off. It's a time where you have, and I talked about this a little bit yesterday. I host a podcast talking specifically about this, and this is a day, or this is really a period of time to where, and many of you, if you've watched this show, heard me talk about, if the market isn't cooperating with your strategy, I always say, ask yourself three questions. Is it me? Is it the market environment? Or is it my strategy? And for the beginning part of my career, I lost on almost every rollover. And I'd always be scratching my head being like, why can I not make money during this time? And it's really not because of me or my strategy. It was because of the market environment. And when you go from one contract to the next, and a lot of you have probably pulled up charts and you see continuation charts, and you're like, oh, look at that big price gap. Like right now we have, I think it's roughly 30 points difference between DECE and March. And you have contracts that people have from the prior quarter that are moving. If you're long the S&P and DECE and you want to continue to stay long, not sure I would really agree with that, but if you did, you wanted to roll them over to March, so you have to sell DECE and buy March, right, to keep that same net position on your books. So what happens is you have a period of time where people have to do something. They don't necessarily maybe want to do something. So that changes the dynamic of your technicals and just the market environment, because let's face it, anytime you have to do something, like anytime we're getting out of a loss as a trader, like we have to get out. We've hit our risk amount. We just, boom, we hit the bid or we buy the offer. In this situation, this isn't rotating out of a loss. This is like, I have to move my position. So when can I move a big position from one market to the next? And you looked at yesterday and you notice these peaks and valleys. Like, and if you watch any sort of order flow like I do, you have that tool on Ninja, that order flow delta I talk about a lot on here. You can see how it just could potentially get very aggressive on the buyers near the highs, and very near the lows. You see selling get really aggressive, and you're always like, Well, wow, normally that would kind of maybe be a follow through, or at least maybe a pause and consolidation, but it's just these snapbacks, right? And what it is because when anytime you have a big position, think about it from this perspective. I remember the biggest position I ever had on was 500 big S&Ps, which came out to 2,500 E-minis. And it was at the time where I was doing the arb between the pit and the screen. And so I got hit on a big position with the guy I was doing the arb with. And he's like, I bought 500 bigs. And I'm like, okay. And now I got to start hitting the book to get out of them. And when you look at the book, when you have a position on it, obviously that was a big position for me. I looked at it and I'm like, man, if I just start hitting this book, I'm going to be moving the market. Right. And so think about somebody who's got 10,000, 20,000 E-minis on. They have to move that, right? Because they're trying to keep it on their books. So what happens is they actually wait for times where they know they can get out. And so back to the story with me a little bit was like, I know if I just start really hitting the bid, you're going to have other traders seeing that order flow come in and maybe even push the market more in my direction. Now, this is 15 years ago that happened, and the book was a little thinner than it is now. And I was just like, oh my gosh, I this is like I just have to just start hitting the bid because I have to get out. And that's the same type of scenario you have in rollover, and that changes the dynamic and the reactions to when you are seeing the reactions to your technicals, because they're not going to matter as much. Technicals don't matter. You actually are going to probably see some opposite things happen, because it goes back to that story that I had. Like I had to get out, I had to do it. And so I didn't really have a choice. I just had to go and just cover it. But a bigger, much bigger position, they're going to look and say, well, you know what? Maybe there's some support here. Maybe I'm going to hit the bid really heavy here, because maybe that I have an opportunity to have some fight with me and allow me to get a cleaner position to move from the D's to the March. So that's why you have these extremes, and they kind of just turn on a dime like that, because people are looking for opportunities to move big positions. And so just the whole dynamic is really different. And so I always say, step back, watch the markets during these times, learn something from rollover. Don't ruin Christmas.
No, that's a great point. And I think if you mentioned, if you're new here, if you're a new trader and you're new to the futures market, at least, rollover, you mentioned two rollovers, or you mentioned two different points of rollover, right? There's the expiration where the contract is done, right? So
Yep.
for physical products, there's delivery. For financial products, there's just basically a settling up of the bank account, essentially. But you're not talking about necessarily expiration. You're anticipating expiration. If everybody waited to the last day, you'd have these wild volatility moves. You're talking about activity. When we talk about rollover of activity, where again, anticipating the expiration, people don't want to wait to the last minute. Maybe it's a week ahead, maybe it's 3 days ahead, depends on the market. But that's where we start to see this disjointedness from, let's say, our technical screens, our technical indicators versus the price action that you just described, where there's these movements that just aren't explained by the technicals.
Exactly. Like, we're going to pull up a chart here in just a little bit, and I'm going to look at the daily chart in the E-mini S&P, and it's going to show that it's going to show the continuation chart, right? Because we want to see the whole year. But you're in between this phase now where you had positions on, if you've been carrying positions or you've been charting the whole quarter, from the middle of September through October and November, where you've been charting the DEES 22 contract. And now you look at the chart today and it shows the March, and you're like, well, that totally throws me off, because now we're actually closer to the 200-day moving average. We're higher because the March is priced higher, which happens a lot of times as you go into the new contract. And actually, this is a time where I don't know why I can remember a time. It's maybe been, gosh, I don't know, remember a time where we've had this wide of a spread. And that's something also to understand, is like, there is a spread. There's actually a market just on the spread. So as you start to see volume start to come in, as we start to see it split more evenly between DEES and March, and really you start to see that as today is, because as you could see with Ninja, when you logged in this morning, you had the check marks. Do you want to just check and move forward with March? And a lot of platforms will just automatically roll you over, because they don't want you necessarily to get caught in a position into expiration. That's kind of why we have this buffer time. So this way you can you actually have the time to say, okay, well, they're telling me to roll right now because the exchange is moving to the front month, but you could really choose, if you want to continue to trade it. But as you see that spread typically starts to tighten up, and you see volume being evenly distributed between both contracts. And that's because there's people just trading the spread. So understand that once again, I mean, there was actually a pit just for the spread for the S&P. I know some people may not even know that. And once a quarter, they come in and just trade the spread. And it's once again because you have massive positions that have to move, and you're basically, they're trying to simultaneously sell one and buy the other. So you would think, well, if I come in and sell 500 S&Ps on one and buy 500 on another, it really should kind of offset it. But that's not always the case, because one market, you're going to have somebody and traders making a market possibly differently. So you cause this dispersion, right? And that's why there's actually a spread. And that's why you see these peaks and valleys, and why you see a very choppy time during rollover, because once again, the people that have to move the massive amounts of contracts are going to wait for a time that they can get it done the most effectively, the most efficiently. And that's really why rollover is just not, when we're looking at the charts today, the technicals just don't matter today intraday. We're going to talk some big picture stuff, but the intraday technicals, in my personal opinion, are just not going to work. They're not going to work as well as they would on what we would call a normal day.
Well, as a CMT, I don't like to hear that, Anthony, too much. But
Sorry,
one thing
buddy.
I've always said, no, that's okay. One thing that I've always said, the unique to the futures market is the time aspect of it, right? The expiration. And so the way I look at spreading the two contracts near expiration is you've got this time value that's somewhat inherent in the futures contract, really becomes evident near expiration. So you look at two contracts. One is about to expire. You've got another one that's 3 months expiring. There's a difference just in the time value, right? So
Exactly.
as we get closer to expiration, then we get to expiration, that time value goes almost to zero. And then the 3 months out, we still have 3 months to kind of see where this contract ends up. So there's also a difference because of that as well.
Think about how wild next week is going to be. Wednesday,
Right.
Fed meeting, you got expiration, options expirations. I mean, it's going to be, basically next week is the last week of the month, as far as I'm concerned, last week of the year, because after next week, obviously there'll be follow through, and it'll start to get back, I think, more, cleaner technically, but kind of what sets up next week will most likely set the tone for the rest of the year. What the Fed does and how we get through expiration. I think we'll have a better gauge of what the end of the year looks like. And actually, I want to bring up the chart now, because I think, as you and I know, Tom, we love to talk about some technical stuff. And
Sure.
Talked about the continuation chart. I already rolled my contracts, because I know most of you that are probably on NinjaTrader, you probably saw those check marks when you logged in this morning. Or if you're not on NinjaTrader and you're tuning in, you could see that like I said, pretty much everybody's rolling over to March. So you see the continuation chart here. And you look, and I've talked about this, we have this downtrend for the year, and it's pretty incredible, Tom. Like I said, I'm not a downtrend or uptrend drawer. I'm not a trend line drawer. I just really, I don't. But there's a couple people I'm friends with, I know, like Julia Cordova and other people, Swing Pony, and they were looking at these trend lines. And I said, you know what? I've got to acknowledge this. So I saw that we're in this big downtrend for the year. Look how clean that is, Tom, right? 1, 2. Look at it. It's almost, look at you. What is
Almost to
up
the
there?
point,
I can
right?
guarantee you, I was looking at this and going, no way it's going to stop right there. Right. And then right there, it does it again. I saw it last week and I'm like, is that really going to be the high? Are you kidding me? And you have this 200-day moving average, which I have up here, which when I look at it, I say, look it held two things that, let's face it, as traders, most of us aren't going to make trading decisions off of this. But these big picture traders, these the trend players, are going to look at this and say, that was a massive hold for the bears. And the last few days, last week, I struggled quite a bit because I thought it was a little choppy around the 200-day. But I've been short pretty much every day. So I'm kind of playing catch up this week and having a decent week, getting back kind of what I did last week. But I just feel like on a technical basis, when I look at the S&P now, hard for me to want to be long at all. I mean, what say you, Tom, when you see something like this hold, it's like, you want to acknowledge it, but you're like, is it that easy?
Well, and you're right. That's, you know, we're bearish until the chart tells us else, you know, other that it's not. And there are a couple things that I'm looking for, which is a lower high, I'm sorry, a higher swing high or a higher swing low. We're not getting it. You know, if you
No.
look at, you're looking at the highs, which again, you know, pretty incredible that those 4 points are right on that trend line. Like that doesn't happen too much, right?
No.
And you know, if you know of that trend line, if you're looking at it, you say, my gosh, that is some really good guidance there. We don't have it on the downside, which in a bear trend you don't really need it, right? Because you're not going to see how much farther it goes. You're using trend lines to see when is this trend changing, right? So we're in a downtrend. You want to know when we're going to go up, so your trend line is going to be in the on the top. And the amazing thing again, like you said, the alignment of this trend line pretty interesting. What does the market know that the trend line is reflecting?
Yeah. And so part of what I talked about on Twitter coming into today, it says I want to give some tips for trading rollover. So my first real tip is when you sit back and you look at what's happening in the roll, don't get caught up by too much of this intraday action. Pull it back, look at what's been happening on the big picture, because the rollover can chew you up. Because I go back and I'm going to say it again, it's when people have to do things, not when people want to do things. So you look at us and we're really not in a critically important area technically, right? So what you end up seeing is just a lot of back and forth, and it's really easy to get chopped up. And so my first tip is step back and just look and see what is the primary trend. This can go for any market time, but especially in rollover. And I was actually carrying a small short position coming into today. I've been using the micros for it. I normally will trade the ES, but I'm actually going down to the micros. Remember, there are the micros, everybody. It's 1/10 the size of an S&P, and it's just a way to be able to participate in a direction that I like. So I've just been sitting short, kind of keeps my brain, working and I'm engaged with what's happening in the market. I'm also using some event contracts, not today though, but I use them just to keep myself engaged in the marketplace because I know that my intraday stuff, which we've talked about here all the time, isn't going to be as effective. And then the other tip is, look at, you can go into the intraday and look at the order flow. And I think that it's important just to look to see, and maybe I have one of these. Yep, I do. So what I like to look at is how is the market, like how is it absorbing order flow? I mean, order flow to me is a very important tool just to watch to see what happens during rollover. You guys know that I always like this. This is the order flow cumulative delta. If you've not seen me put this up before, Tom and I have talked about it a bunch of times. You have to have that order flow package on Ninja. I highly recommend getting it because I just really think I think order flow is the best confirmation tool for any trading strategy because it's confirming what you think and what the market's actually telling you, right? So this morning we had this move lower. You could see the order flow was straight down, then they walked it back up, and you could see that I like looking at the spikes and see how it's reacting. And this confirms to me a little bit of what I've discussed. Powerful move lower this morning. You see that, guy, everybody, right? Boom, boom, boom. Order flow is hammering the bid. And you're like, wow, they're just selling everything. Sell the next rally, makes a new high. See, like for me, normally I would be short in here, almost guaranteed. Anybody who's followed my strategy knows 3-minute opening range, comes back up, tests VWAP. I would be short the whole way. I'd be trying to hammer them in here and I would just get crushed because order flow, walk it down, order flow, walk it up. Let's really pound into the upside here. It goes up, makes a higher high, come in, sellers. This is what happens in rollover. So having order flow up, I think, is extremely important.
Oh, that's great. And again, like you said, it's part of the order flow package. One of the tools that I think there are about 4 or 5, maybe even 6 indicators with the order flow package. It's something that certainly is a great graphic to help understand what the participants in the market are favoring, if you will, through volume.
Yeah, I mean, and look at once again, my big picture look would be bearish. And I would get confirmation this morning from opening range in the 3-minute high, break down, VWAP getting below that. Talked about this a million times. Order flow sellers, I'd come in, I'd be short. Maybe I'd take some off. I'd probably get aggressive here and I'd lose money. I mean, so I know this is why I stay away from it. And you just got to know. So watch. So far, the tips are look at the big picture, understand what's happening, understand the current environment of the market. It's still bearish. We're in an area that's not critical. Technicals are going to be secondary because you have rollover, right? So your intraday stuff is just not going to matter. It's not like we're testing a major moving average or a trend line. We're in the middle of a range, right? Then you pull up your order flow tools, wait to see how the responses are. You're going to get kind of what you want, and then all of a sudden, bang, they're going to rip them the other way. And you learn something, right? You learn to see how rollover trades. And you realize that in this particular instance, if I would have taken this short and lost, I would have been like, wow, does my strategy just suck or is it me? And I would have been like, it's just rollover. So understand that. And I think it's just extremely important to just dial it back during this time, watch, learn, and just see how your strategy is. And I also don't want to be totally negative on it where maybe there isn't an edge for you here, but because maybe your strategy, it does really well in rollover, then embrace that. If you found an edge, then do it. My stuff just seems not to work as well. So that's really what I'm looking at. I want to quickly go to copper because first I want to see where it's trading because I'm long a little bit of it. Also, I'm getting, where is it? I'm long a little copper today. There's some news that came out. Maybe many of you maybe saw some stuff on Twitter this morning about the China reopening again. I feel like China reopens every other month. I didn't know that a country really closes all the time, but apparently that's always the case, right? So they talk about the reopening, and that's a big impact on copper. And then you're seeing really just this, there's going to be a supply issue for copper. So you see a lot of the macro stuff starting to come into play. And then I pulled up my chart and I said, we made a higher high this morning. Initial pullback came in. I put some in my swing account and I actually used event contracts, which I think is a great way to play it because I'm not going to be someone who intraday trades copper. Just not my thing. So I just put some small positions on. They have micros for these as well for copper. And I'm long a very small position. And you might look at it and say, well, the 200-day moving average is pointing down. It hasn't gotten above it. That's what we see here. But look at the mouth of that Bollinger Band opening up. If we start to push up here, it's why I started a small position. We get above this 39.34. Ooh, I have a feeling this thing could be $4 mid fours relatively quickly. Because anytime that Bollinger Band opens up, right, especially in an area where we're starting to potentially break out to the upside, you've got macro and technical potentially supporting a possible breakout. I like to be in really small on a day like today. Watch it, maybe use some event contracts for during the day. I bought some yeses. If you're not familiar with those, allows me to participate for the day and without having to be super worried about, getting stopped out. My stop will be below this swing low. That's not really a swing low, but it's yesterday's low. I look at it as like it took out those couple lows. I feel like if it takes out that low, I'm probably toast. So position sizing is according to that. And that's what I'm looking for. So that's
Anthony,
bullish copper.
I like it. I like the analysis, and certainly fundamentals and technicals, you use them both, right? We're not just technical traders. We're not just fundamental traders. You mentioned event contracts, though. You used event contracts. Are you looking at the event contracts market, so to speak, to see what the event contracts market thinks about copper? Or you said you had some positions as well. You do both, or how do you use that in terms of your position on this chart?
A quick thing, of those of you that don't know what an event contract is, you can go to cmegroup.com, search for event contracts. It's a daily option, okay? And it pays out $20 or zero. So that's just it. And you can see here is basically all of the different contracts. So you're going to have S&P, NASDAQ, Russell, Euro, Dow, gold, silver, copper, natural gas, crude oil, right? And so when I go to copper, and why I like it for this specific instance is because so I don't look for it for any gauge for what it's going to do for the day, because it's, like I said, it's a daily option. And what I use it for, I'm not looking at it to give me any sort of insight on what I think that maybe the market makers or the people making markets for these contracts are telling me if it's going to be bullish or not. Because there's not a lot of, and I'm not an options trader, but maybe I go to the regular options market for that. But this is just a great way to be able to see something to where it's like, look, will it close above or below a certain level? So I actually went a little out of the money this morning. And so you could see last night the at the money strike was 385. I picked 390. And so basically it allows you to think if there could be a big move higher, you pay, it'll pay you back $20. So I don't use them for any sort of gauge of sentiment at all because they refresh every single day. I simply use them as a tool for execution to be able to participate in a direction on a day where I don't want to be intraday trapped too long and get stopped out, for a day trade. I just want to try and be long it a little bit on my swing, and I want to be long it intraday. So I use the event contracts because with the event contracts, it's not leveraged. So if you pay whatever you pay for it, is what you paid, so you bought a trade. And that's what I really like about them because the risk is done. I bought the 390s. If it closes above 390 today, I'll get paid $20 for as many as I bought. And that's how I use them. And I just look at it and go, it's already a loss as far as I'm concerned. I bought the trade versus like a future, like my swing position. Like I'm still constantly thinking about that because it's like, oh, I don't want to see this thing come down a tick because I might get stopped out. But with the event contract, it's like, look, if it rallies today and closes above it, I make money. If it doesn't, I already bought the trade. So that's how I use them specifically in this instance.
Awesome. Thanks for that explanation. We're still trying to get our hands around the market, and who better to talk to than you about it? Because I know you're a lot deeper in the weeds than we are.
Well, let's go to that Ask DYE because I know we got a few minutes left, and I'm interested. This is a good question this week. They're all good.
Yeah, no. So we had a question from Marco Esquandolis. If I butcher your name, Marco, I apologize. At Punch You in the Spy is the handle on Twitter. I like that. And he sent in a question. What was your aha moment when it all clicked?
Yeah, I mean, it's such a difficult question to answer, right? But it's a good
Maybe you
question.
had multiple
because,
questions too, right? You might have had multiple aha moments.
Yeah. And I would say, and I've been asked this many times in my career, and I probably have had a few different answers, because sometimes you think back of your career. I'm currently writing a book. So kind of a little plug there. Won't be out till next year, but just about my journey and some other tidbits along the way in the book. But I think that the aha moment for me, I wouldn't say that there was an exact moment. That's why I said I might have answered this a couple of different ways over the years, but I would say that the moment that I knew that I could actually make money in this business, I think that's the one thing, because the first 2 to 3 years of my career, I didn't feel I could, I didn't know that I could make money, right? I was basically, I had a good win rate, but I was still losing. And I'm just like, either I just completely suck at this business or I'm just missing something, right? Because I just couldn't put my finger on it. And so I guess you could call it an aha moment when I finally realized something I talk about here a lot. And that's that, I realized that I make money in moments, and that when I look back at all of my records, and I would make money maybe 15 out of 20 days for the month, and I'd still barely break even or just pay the bills. And I'd be like, how is that even possible? I mean, I can't win better than that. You're going to have 3 to 5 losing days a month. So my aha moment was realizing that in those 15 days or whatever days that I was winning, what was happening in those moments? Did I stop because I was just up my number? Let's just say early in my career it was $500. I'm up 500. Then I just stop, right? And I would go back and look and see like this string of days where it'd be 500, 500, 500, 500, 500, 500. And you'd be like, okay, great. And then you'd have my string of losers, 500, 500, and then it'd be back to a win, back to a loss. And you look and say, okay, by the time I paid some fees, some expenses, those 5 losses really added up to like around 8 losses. And the times that I would take the $500 winner, I would be done at 9:30. It's a central time back then, go have breakfast, feel good about it, and just take the easy win, right? And I never went beyond that. And I said to myself, Anthony, you better start overcompensating on the winning days, and the losing days, try to recognize as soon as you can that this day is crap for you, like a rollover day, and either don't trade it or only lose 300, right? So I started to become the best risk manager, that I could possibly be. And that doesn't mean just losing less. That also meant making more when the market was giving it. So take more when it's giving and give less when it's not. And when I was able to start to accomplish that, I felt a stronger hand in the market. And that was a moment where I realized, I could really do this.
Awesome. That's really great advice and really good insight. Thank you for that, Anthony. Really excited to hear about your book too. Can't wait to hear about that. And we're running up right against time. How can people find you, Anthony?
Just go to @Anthony Crudele on Twitter. Everything flows through there. You'll find my YouTube channel. I've got podcasts. I've got a lot going on, but everything flows through @Anthony Crudele through Twitter. You can go to anthonycrudele.com. And also, if you're interested about event contracts, you go to placeyourtrades.com.
Awesome. And if you do want to submit your own questions, you can go to Twitter. Just make sure you have that hashtag AskDYE and the NinjaTrader handle @NinjaTrader in the tweet that you tweet out. And if we pick your tweet to be read on the show, we'll send you a nice little gift there. So again, Anthony, thanks. We'll do this again next week. And in the meantime, thanks to all the viewers for coming, and have a great trading day.
See you, everybody.